Has Logan Queensland just completely done its dash for us as property investors?
Last 10-year growth, 116%.
This episode, we answer the questions you guys have sent in. Is Logan still a good place to invest, or should I look elsewhere for better growth potential? Starting with the state, zooming down to the LGA, and then isolating the question in the specific suburb you're after.
Average wage is growing fast in Queensland, really good for affordability.
And we're doing this with none other than Junge Ma, lead research analyst from InvestorKit, helping unpack the pros and the cons and giving us a better understanding by translating the data so we can know if Logan in Queensland is still worth investing in.
Inventory in is now a bit higher, 4.8 months of stock. Next data point, 5-year annualized growth, 13%.
Is it a no? Is it a go?
Personally, I would want to say it's a
If you've been thinking about investing in Queensland, more specifically around the LGA of Logan, you're going to enjoy this episode. My name's Todd Sloan. This is the Pizza and Property Podcast, and this episode is powered by Property Strats, Property Developer Network, InvestorKit, and Full Circle Finance. More about our awesome show sponsors in the show notes below. But right now, let's jump into the episode with Junge Ma. Junge Ma, it's been a little while.
How are you?
Good. How are you?
Good as always.
Good. You ready to jump into some state facts, LGA facts, and
Suburb facts.
Suburb facts?
Yeah, let's do it.
Beautiful. Our listener's choice question this month has been sent in by Ellie. Now, Ellie's actually got a pretty big question here, so I'm going to do my best to just read this all out as quick as I can, but super detailed, Ellie, and thank you. You've been listening when I say give us more information to make it a better episode for you. I've got here, house. I purchased a 4-bed, 2-bath house in Logan Reserve for $610,000 in November 2023 with a 5.37% rental yield at $630 a week. The property has seen around $90K capital growth in a year with a recent sale in the area of $700,000. I'm considering purchasing another property and would appreciate your advice on the following. Is Logan still a good place to invest, or should I look elsewhere for better growth potential? What is the outlook for Logan's growth considering council plans and future prospects? If not Logan, where else in Brisbane or suburbs, regional Toowoomba, Bundaberg, should I be considering similar opportunities? Again, thank you, Ellie. A lot of detail in there and a lot to unpack. So if anyone right now listening is interested in Logan or potentially a few surrounding regional towns, or not even surrounding, but regional towns in Queensland, this is probably going to be an episode you want to listen to a couple of times. But Junge, where do you want to start?
Let's start with Queensland itself.
Queensland?
State.
Done.
Cool. Queensland, strong state at the moment. Population is high, economic growth is high. The main driver, it's not just overseas migration or just internal migration, but both. Very healthy population growth. Average wage is growing fast in Queensland.
Yep.
That is really good for affordability.
Fantastic. Okay, so there's more opportunity for wage growth, so people can earn more money. Mm-hmm. There's been a lot of growth around Queensland as far as population, and also GDP is also strong too.
2.1%.
Right.
Not bad.
Everything's looking pretty healthy.
Yes.
Okay. All right. Cool. Is there anything else you wanted to talk about state-wise before we jump into the LGA?
State-wise, that's it. Everything's looking good.
All right. Let's talk about Logan.
Mm-hmm.
Logan historically has been a place that, again, if you're not familiar with Logan, I think 5 years ago, it used to get a kick in the guts all the time as a waste of money and a place that you'd never want to invest. It then shot the lights out and did pretty well. Some suburbs in Logan actually being some of the top performers, like period. They did really, really well.
Right.
But now getting into Ellie's question, it sounds like she's talking about Logan Reserve as an extra suburb within Logan, the LGA. But it's really around like basically has it done its dash? So can we talk about a few like high level statistics for Logan LGA as we unpack the answer to that?
Yeah, sure. Yeah, let's again start from population.
Sure.
Growing really well, 5.6%. I guess, the high population growth is because of the high construction activity there.
Outpacing or?
Based on the inventory level, I would say population outpacing construction.
Gotcha.
Because inventory level now is 3.6.
Uh-huh.
From the level itself, you can see how much new housing supply they have.
Yep.
But it is declining.
The lower the inventory levels, the higher the pressure on the market. So the higher the inventory levels essentially means the more choice, which means the less pressure on the market. So already it's looking like it's going in the direction of maybe there's still more growth ahead. But,
Yes.
But I feel like you've got a bit more to unpack. What's next, Jung?
Next data point, days on market, also looking good. 38 days, relatively low. And it's also declining.
Right. Okay. So we've got a lot of population growth happening, but supply of housing stock is not keeping up with the population growth.
Right, seems so.
Inventory levels tracking down. Days on market tracking down. What other stats should we look at?
Rental market vacancy rate 0.98, let's say 1%. It is not as low as Brisbane as a whole, I believe.
Okay.
But naturally, because of how many new houses are being supplied in the area.
Gotcha.
But 1% itself is not high. It's still a very tight
Yeah. It's really low.
Yeah, and it's not going up anytime soon. So rental market is also really tight.
Got it. All right. As I said at the start, Logan's been an area that a lot of people have been in the past, like don't waste your money, don't go there. But I know it's done pretty well over the past few years here. But what are we looking at as far as growth stats are concerned?
Last 10-year growth in Logan was extremely high, 116%.
116.
Yeah, that is
More than doubled.
right, more than doubled, and it's higher than Brisbane's average. Brisbane now is 85% in 10 years. It's kind of in line with the long-term average. But if we look at Logan, or the SA3 name is Browns Plains, it's actually much higher than the long-term average.
And this is growth that's happened just in the past kind of 3, 4, 5 years, because prior not much was really happening, was it?
Yeah, I think it's most of the growth happened in the past 5 years, I would say. What I see here, last 5-year annualized growth, 13%. And last 3-year annualized 17.
Right, but if we were to look at those same stats from maybe, let's say, 2017 to 2018, that's not going to look nowhere near as healthy, is it?
That wouldn't be like this.
Okay. All right, and I guess this is where, like, Ellie's really asking the question, because the picture you just painted then sounds like her question around basically, is there enough juice left in the tank to keep going? Like, it's sounding like maybe it's hit its peak, but then you're talking about economic factors that also sound like it's still got a lot of strength to it. Queensland as a state is going along really well.
Yeah.
We're talking about like the LGA itself. There's a lot of population growth, not as much buildings. Like, it sounds like there's still some common factors to keep it going. Where to from here, John? What are we looking at next?
I think if you just look at the declining inventory level, declining days on market, the tight rental market, I will say there's still room for growth in the coming years. But I guess it is extremely high last 10-year growth. It has to be bear in mind. It could be limiting the growth volume in the medium term.
Yeah, for this to continue to do, what'd you say, 16% per annum, 13% per annum, like it's not going to double again in the next few years. Like, it's just...
Right, it will need time to come back to the average.
Gotcha. Okay. So when you say that it's looking like there's still growth available there, are you talking about more like a historical normal level of growth of a few percent a year, not double digit kind of percentages?
Based on what we are seeing now, based on the current market pressure, I would say in the coming 1 year, above average is okay, is no problem. But moving forward from there, we need to see more data, more trends.
Gotcha. Okay. So as far as Logan Reserve is concerned, more specifically to the area that Ellie's invested in, is there any real outliers in the data for Logan Reserve in comparison to Logan itself? Compared
to Logan, the broader region, inventory in Logan Reserve is now a bit higher, 4.8 months of stock.
It's heaps higher.
But it's declining. Days on market is shorter than Logan and also declining. It's 29 days now. And vacancy rate in Logan Reserve is higher than Logan, the region. It's 1.8%, very close to the 2% benchmark now.
Okay.
And I believe this could be because of the high number or high proportion of investors in that suburb. Rental property percentage is now 48%, so much higher than the Australian average of 33%.
Okay, so it's definitely more of a investor suburb.
Yes, I believe so.
Inventory levels are higher in comparison to the LGA of Logan itself. Days on market are actually lower, so there's still some decent pressure around it as well.
Right.
So as far as Ellie putting her money elsewhere, my guess, I always like to try and jump in with this, is that you're going to be like, it's a no. Like maybe it's a go in the short term, but if Ellie's looking at buying something with like, what do the next 5-10 years look like? Yeah, my money's on no. Am I right?
In the short term, I guess it can be a go. And considering how Brisbane or Queensland's economic growth and population growth is going, in the long term, it should be okay. It should be just healthy. But I think from a portfolio building perspective, you may want to diversify your portfolio a bit. Now that you already have a house in Logan Reserve, even though it has a healthy growth ahead, you may want to go to a different market with a different market cycle from Brisbane or from Logan.
So furthermore to Ellie's question, Junge, because it's sounding like the diversification play might really be the way to go forward for Ellie. Now, the areas that she's named, Toowoomba and Bundaberg, kind of jumping ahead a little bit and thinking about this, I feel like you're probably going to answer like maybe they're in a little bit of a similar category. I've gone through similar growth cycles. Is it time to look at a whole nother state totally, or have I got that completely wrong?
It depends on how comfortable Ellie is with interstate investment or diversification. Toowoomba and Bundaberg, they are indeed different markets from Brisbane. Toowoomba's cycle is a bit similar to Brisbane's, but I think there's still some lag between them. Toowoomba's market cycle is close to Brisbane's, but there's still a bit of lag between them. For example, Brisbane's last 10-year growth annualized is 6.3%, while Toowoomba's is 5.9%. Not as high as Brisbane's yet, but it's getting there. Okay.
All right. So it sounds like Toowoomba maybe not the best second option, but maybe there's a little bit left in it because, like you said, there's a bit of a lag between the two. What about the other Bundaberg? Similar?
Bundaberg, yeah, actually because of its high growth over the past 3 years, I believe. Its last 10-year growth was actually a bit higher than Brisbane's, 6.7%.
6.7, okay.
It's still within that long-term average range, but just at the higher end. Market cycle-wise, it is slightly different from Brisbane. So if you would like to consider Bundaberg, it is an option. The only thing you want to keep in mind is that Bundaberg has passed its peak of growth. Moving forward, there's still a good amount of growth ahead. It can't be stopping immediately, but we might not be expecting the extremely high growth as it has achieved in the past 1-2 years.
I don't really go out much anymore. I'm not a party kid. I was when I was younger, but I always look at this as like you've got the choices. You want to be the person that arrives at the party at like 5 or 6 o'clock and no one's there? Probably not. But you've still got a lot of party left ahead of you if you're happy to be early.
Right.
But do you want to be the person that also rocks up at 2 a.m. and everyone's kind of like winding down and it's getting to the end of it? You probably don't want to be there either. You want to kind of find that little sweet spot there. And by the sounds of what you're saying is like, maybe it's like 11 o'clock, 11:30. Like you're still going to have a good time, but the good time is potentially limited.
I guess, yeah, it's a good metaphor.
I don't know if that analogy works for you. So in answer to Ellie's question, is it a no? Is it a go? Officially Junge Ma from InvestorKit. What is your answer?
Personally, I would want to say it's a no, not because there's no growth ahead for Logan Reserve, but more from a portfolio diversification perspective.
Yeah, try and find another party that's maybe at 9 o'clock.
Yeah, and also it depends on Ellie's needs.
Yep.
If she doesn't care, I guess short-term fast growth, I guess no need to enter markets at the peak of their growth cycle. Markets like Toowoomba, Bundaberg, at the second half of their market cycle, there's still a good amount of growth to go. And I guess yield is higher than Brisbane. Balanced economies also in those cities. So still good properties to hold.
Gotcha. All right, Ellie, I hope that has answered your question. And if you guys have got a question you want sent in, and either myself and Junge or myself and Aj are going to be pulling it apart. I don't know why I say me. They're the one, she does all the work. But if you want something pulled apart and put as much detail as you can in, like Ellie has, because we can get such a better answer for you, click the link in the show notes below and tell us the area you want looked into. But otherwise, Junge Ma from InvestorKit, thank you as always for jumping on the show.
My pleasure. Thank you, Todd.